Here we go. It's your boy Kamal Hart on the chart. Uh, like I was saying, we're gonna riff and rant today. Couple points that we're gonna touch, um, but it's a lot of things I see on the chart, and yeah. Okay. I want to start from the beginning of the day and kind of give a realistic feel for how this would have happened real time, at least as close as you can get to sitting here. Um, so I usually get in about 6:20, 6:15. So that would have been this bar right here, this bull bar. Man, I could take it all the way. I think that might even be better. I have all my lines here, but for now, let's just stick to what I have drawn. You can create all these lines before the price action develops. So, big down move. It bounced near where this one bounced. So there's some support. Your upper line, resistance line, I might have put it up here. See how you have this high just above it, close, close, open, open. So, a lot of action on that line. This is an artistic thing, right? It's so subjective that it's more about creating your method of making sense of it, right? You're going to have to name that for yourself. But I hope you get there. So, and then with the midline, I just take the equidistant measurement from this side. So I used to have these lines way out here. You can see how they kind of fit already. So this is essentially what my chart would have looked like right before the market opened. And my midline, maybe just a few ticks higher up here. Okay, close enough. Close is close enough. So we're moving up. Moving up. In theory, since we just came off the lows last, we're expecting prices to touch this line before it, not necessarily before, but when it touches this line, we're expecting it to go to this side, and from this side to come back to this side, and vice versa, until it goes out and doesn't come back. And you just have to learn when to recognize that. So, with this red bar, look how it's larger than this one. It's a pretty big reversal. Prices move down, then a big down. But notice we are looking for prices to come back to this line at some point, right? So this short-term trend line was just created off those two lows. Boom, boom, boom. And you draw that over, copy and paste it, and just make it, like I said, it's art. Just make it look nice and neat. Nice and neat. There's a break outside here of the line. That's fine. Sometimes when it breaks out and closes quick, it needs to be convincing. Essentially, you want it convincing. Like this is convincing, right? Like this is not inside that line by any means. this is subjective. You know, I could have drawn my line more wide by um, yeah, by using those, right? So if I drew it like that, then see how it fits. And then literally what I did before, I just drag it over. And you might get confused by that, but you know, bang. And you can see it like that. See how that one touched a little bit, came close, overshoot. So that's an interesting thing to notice right there, is that when I had the line like this, you see this small overshoot. And then when I have the line like that, you get almost a similar overshoot, almost the same pattern. It like literally just the reverse pattern of each other. That's quite interesting. So especially in the pre-market, you know, unless it's a larger trend line, that's why I like this darker range. Like that's a stronger pattern to really base decisions off of when you start using your micro trends, because that's kind of what this is. It's a trend within a larger trend, so it's a micro trend. Um, you know, little breaks out and above, that's fine. As long as it looks neat, you should basically follow the rules. So that's not what I consider a convincing close. So I'm still looking for, even though prices now are outside my line, to come back to um, this high at some point. Right? So moving down, I know a lot of people, you know, it's a strong trend, but once again, we're looking for that. Then you get this. This is a really nice reversal bar, second entry long. I will say, honestly, it's aggressive because I was watching that and I didn't take it. Well, actually, I missed that. I was in the bathroom. I was like, I left the chart here. I was like, okay, it's gonna take some time. I maybe get a lower high on the way up type thing, and I actually ended up missing that. I got back and it was like this. So that is a little aggressive, because you know, maybe that's kind of a strong move and it broke a couple lows. It's just a nice reversal, and it's a range. You're looking for it. It does this, and that's why it's so dangerous to even trade a range, because it's going to go down, then not go all the way, then come down, but then go, you know, it's going to keep doing that. So it's real easy to get tripped up trying to catch this trade back up to there, and then that one back down to this part, but it's higher now, and you know, you'll fuck yourself up, which I, of course, um, found a way to do today. But that's fine because it's not about losing, it's just about losing well, and you can still do pretty decent. Okay, notice what I said. I mean, this thing is just bouncing, bouncing. It's not even at my lines, you know. So I took this failed second entry long. Um, I have a thing where I definitely just take, especially early, just one kind of dumb trade. I think that alone would change the profit margin huge. Just skipping that first trade of the day for now. Um, it's it's technically it, but it's not the right place to take it. That's a placement error. Um, it looks great, but you wouldn't want to. The same reason why I took this, um, you know, it hasn't been fulfilled yet. Even though we had the break higher and then a move one tick higher and then a reversal. So I had a micro trend. This was the breakout, maybe a two-legged move and a big red bar, maybe just test here. Um, you know, the key is that I entered on a stop, so there's not enough room from 64.75, so I would have needed to go one tick past that low, which at the time was just a low, just a single, so I kind of was thinking maybe we'll at least get through there. Um, so this is a place where I think entering on a limit would have been better, but the way this bar ended up forming, might not have gotten in on the limit. So the stop, um, that's what I went for. And then when I saw this bar, okay, it's bearish, but it's inside of it's like matching highs and matching lows. So, that's not what I call technical congestion, but it's about to be. So, um, it could, and once again, I'm just looking for maybe 2 ticks lower. So I'm kind of optimistic, but I'm starting to notice that now there is a double bottom forming. It's almost a triple bottom technically, but overall a double bottom on a larger scale. So new low. Well, we broke this low, so kind of depending on how you look at it, some buying sentiment developing. And then on the third bar, I just didn't get a chance to exit anywhere. And this could be super indicative of people trading my particular strategy. If you look at how this bar formed, it's just like exactly, exactly where, these traders would have entered. Um, that bar closes, you know, just there's no, even if it would have had maybe like 2 bars, could have maybe exited at -1, break even, maybe for sure -1, but it didn't. So that's the game. Started off the day on a full 2-point loss. But the lesson from this is early in the day, in the middle of the range, the last extreme we touched was the low. You're looking for it to come up to this line. You're not looking for it to, don't fuck around with anything trying to come down to this side. There wasn't even really an entry with this. And here, this was the first could be entry and it fails. Double bottom. So keep that in mind in the ranges when you start to see that triple bottom, larger scale double bottom, it could be bouncing. It could get bouncy. Okay. So it keeps going. It's going higher. I drew a little micro trend line because it came from under the lows, under the EMA, this line right here. This is 21 EMA. It came from underneath it to over. So I drew a line. Now there's a new thing going on. Right? I'm looking for it to break outside of my line, which it basically just did, and get higher than this line before going back down, or maybe it just keeps going. So waiting, it starts to go lower, which is good because, like I said, I'm looking for it to come over this line. If prices just fall past this place where I started the micro trend, then that means the micro trend is invalid, and you can just erase it and then work backwards to what this pattern was doing, or create a new micro trend, because inevitably, starts above and ends below, crossing a previous low. It's micro trend. Okay. On this one, we had, I ended up taking this trade. I think a lot of the reasons why I lost this trade make up why I won this trade. It's the same pattern in reverse, going longer. But like I said, we have the better sentiment and trajectory going on. So, you know, you can, even though it's an inside bar, you know, your stop would just go here. That's why I put a green arrow. It's pretty aggressive. But, you know, you have space to this high to get out. And, yeah, so I got out on the first bar that I got in. It was a pretty quick trade, fairly easy. And then stacks up for a little bit and continues higher. So now we get this is a breakout. We made a new